Despite what you are being told in the US mainstream media, the recovery is not universal. The recovery is not pervasive. And this really isn't a recovery after all. So what's really going on? You came here for the truth, so let me unveil that for you. Today we're going to look at what is going on in emerging markets for the most part. I want to cover this with several charts, a lot to get into today. Let's begin with this. Non-US markets are the most oversold versus the US since the global financial crisis. So when you look at it on a global level, you get a completely different picture than if we just look at the US. But a lot of people in the US who exclusively are investing in the US feel that they are somehow sheltered from the outside world. Now, perhaps you would feel that way in the US, a very strong market, very robust historically, the currency is strong, and so I understand why a lot of people feel that way. But this is globalization, and everything has its day. Every currency, every asset, every market, it all has to come back around. So whether that happens tomorrow, whether that happens in 10 years, it all depends. It all depends on several factors. The number one factor today is quantitative easing. A lot of people are not aware of the effects of quantitative easing. A lot of people don't understand derivatives, but this intertwines and interconnects all of these different markets around the world more so than we've ever had in history. Now take a look at this. Deutsche Bank has once again fallen below that mark, the 10 mark, fallen below here now, 9.5 essentially, and there's no telling how low this stock can go. It is down 40% this year alone. European bank stocks are down significantly from their peak. I'm pretty sure that this is a bear market. Looking at these statistically, we can see that there are so many markets out there that are in bear territory or close to it. MSCI emerging markets are down yet again. This is looking over the past week essentially. And as far as I'm concerned, there's no stopping this decline. Money is leaving the emerging markets and it's going into the US. That is a fact right now. Now that could change any second. But as of right now, that's what's happening. All of these currencies are getting destroyed. And that is an absolute fact, whether you're looking at Argentina, Venezuela, Turkey, Indonesia, so many more to add to that list that I've shown you here. But ultimately, versus the US dollar, they're looking very, very weak. So a lot of people have been suggesting that we should just invest in the US, invest in US dollar, invest in things that will be robust if a US dollar is robust. And that could be one play, definitely could be. However, is that the solution? Is that really something that will provide you with security, or are you just buying time? That's the question I have for you. Although Chinese companies are looking to boost domestic natural gas production, local production won't come even close to meeting surging demand, and China is expected to increasingly rely on gas imports. Now, according to the IEA, China will become the world's largest natural gas importer by 2019. The share of imports by China's natural gas supply is seen rising from 39 to 45% in 2023. Now, I want to show you this directly from their own website. Gazprom, the Russian corporation, they begin their startup operations at the third gas production facility, and this is going to bring in all of this gas into China. China is really consuming right now, and as that previous article suggests, they are going to be the largest natural gas importer in the world. So we're talking about mass quantities here. That's bullish for this commodity. That's also something that you need to understand about the ties in between Russia and China. They are partnering on just about everything here, and the ties are very, very strong. That's as far as I'm concerned. So they are going to do bilateral trade together, and they're going away from the US dollar. So imagine the biggest importer of so many commodities, whether it's oil, whether it's gas, whether it is any of these different commodities, metals and things, they are trying to, slowly but surely, trying to do so away from the US dollar. So in the long-term prospects, we have to be very concerned about what's going on. Do I think that's going to happen in the next 2 years? No. 5 years? Not really. But 10, 20, 30 years down the road, I think we're going to be looking at a very, very different order. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel. I do appreciate that very much. And if you want the financial education you were not taught in schools, these 2 books have it all. You can check this out at the link in the description of the video. You're going to get to learn everything you need to know from A to Z, the foundation, the history, how to make money, and so on. All of that is in the link in the description. You could flip through the books at Amazon, and if you're more interested in the audiobook version, you can get that at themoneygps.com.